on, guys? It's Luke here. Today I wanted to make a quick video going over the A plus reverse model. This is what I use all the time when I'm looking at reversal type trades, and this is a trade that I took today. Unfortunately, I didn't catch the whole move, but I'm going to kind of go over that exactly and kind of go in depth and talk about how you can catch moves like this. It's just a 4-step, basically simple process. I mean, I'm sure a lot of you know this stuff exactly, but I want to break it down for people who might be a little bit newer in this stuff. So this is called the A plus reversal model. The step one is going to be manipulation, and I spelled that wrong, so let me fix that up. But manipulation is just going to be basically a liquidity sweep or a higher time frame FVG fill. So for example, say we sweep out a London high, a London low, an Asia high, an Asia low, an hourly high, or 4-hour level, whatever, or a fair value gap fill. So that'll be like a 1-hour fair value gap getting filled, or 4-hour fair value gap filled, and then you're expecting the reversal off of it. So for example, if we sweep a high, you're going to want to see a sweep and a move lower. If you sweep a low, you're going to want to see a sweep and a move back up. The next step is going to be invalidation. So that's going to be invalidating the opposing order flow. So this is going to be from an inverted fair value gap or a break of structure, and this is going to show the order flow shifting. So for example, in this example we're going to go into, we manipulate above a high. So we sweep a high, we're looking for a reversal to the downside, right? So if you're pushing up, order flow is bullish. We want to see order flow shift from bullish to bearish. So we want to see bullish order flow get invalidated, and we want to see bearish order flow get respected, because we're looking for a sell. We're looking for something in the bearish direction, right? The next step is going to be a retrace and a continuation. This is the simplest part. Basically, we're just looking for price to retrace into a continuation confluence, and a continuation confluence is just going to be like a fair value gap or an inverse fair value gap, and then you're going to scale down and you're going to look to enter. This isn't going to be specifically on the time frames, but just the method itself. This is an easy model for reversals. I'm pretty sure, again, a lot of you know this, but this is just a clear-cut example of like how you can utilize this. So let's put the replay tool back on and kind of look at this. I actually took this trade, like I said. If you check my trade recap from August 7th, I'm not sure when I'll upload this, if I'll upload this the day after or whatever, but just check there. You'll see I got out a little bit earlier. I'll show you guys, but basically NQ sweeps this high right here. So we have two options here. If we're looking for continuations, then we're going to be looking for price to continue up to the next draw on liquidity, which is going to be this 4-hour FVG up here. But in this case, we end up getting reversals. So we want to see bullish order flow get invalidated, and we want to see bearish order flow get respected. So we want to see price come like this, and then we want to see price seek out all of this sell side liquidity. We're going to see price come down to this low, this fair value gap, this fair value gap, and if we turn the kill zones indicator on, we want to see it potentially come down to this London low, and then to this Asia low, and then you could really see it come down and fill this 4-hour fair value gap in, because when you have a gap that's resting just below or above a bunch of draws on liquidity, price is usually just going to aggressively move through all of them. So like, for example, we have this London low, Asia low, and this New York PM low, all resting relatively close to this fair value gap. Price is usually just going to manipulate through all of them and then tap into that gap. So let's go back up here. So step one, manipulation. Price sweeps out this high. That's our manipulation. It manipulates above the high. Now we're scaling down, and we want to see an invalidation. We want to see the bullish order flow get invalidated. Again, this is going to be through a break of structure or a fair value gap getting inversed. So we're going to go down to the 15-minute. There's really nothing for us to catch unless you're waiting for a break of structure down here. So we're going to keep scaling down. The next one we go to is the 5-minute. Again, on the 5-minute, you really don't see anything here. Let's go down to the 4-minute. Now on the 4-minute, we have this bullish fair value gap getting made here, right? So you see how we have this little bullish fair value gap right here? We're going to label this as a 4-minute fair value gap. And if price can run through this, that's going to show that bullish order flow is being disrespected and bearish order flow is taking over. Because if this gap holds and price continues up, that means bullish order flow is still being respected. But if this gap gets run through and inversed, this becomes an inverted fair value gap, and then you can look for shorts or something like that, right? That would mean the bearish order flow is taking over the bullish order flow. So we keep skipping over here, and we see that gap basically get run through, right? Price invalidates that gap. So if you really wanted an aggressive entry, you could just enter here, but the problem is here you don't really get the retrace, and to me this isn't that strong of a close below. You do technically get the retrace into the gap right here, like if you scale down, price close below, but you really don't get a clear entry. So from here, what I'm doing now is we inversed the bullish fair value gap, we ran through it, so therefore we invalidated bullish order flow. Now we're looking for a retrace into a continuation confluence to look for sells to the downside, right? So now what do we have for him? We have a 5-minute bearish fair value gap. Okay, so let's label that right there. 5-minute fair value gap. This can be our continuation confluence. And the 5-minute, keep in mind, is obviously a higher time frame than the 4-minute. It's just an extra minute, but it's going to hold more value. So if we see a 5-minute gap, you always want to take what gap or what time frame is higher, basically. That's the way you always want to look at it. So we have this 5-minute gap. We want to see basically price come into this gap, respect it, and then we can continue to look for sells. So again, from the top, we manipulate above the high, so we have a liquidity sweep. We invalidate the bullish order flow by running through this 4-minute bullish fair value gap. We're looking now for a retracement into this 5-minute bearish fair value gap to look for continuations to the downside. Price comes into this gap. Now we're just scaling down and we're just looking for like a clean entry. So for me personally, I entered off of a 1-minute break of structure because that's what I seen. The entry, you're just going to be looking for an IFVG or a break of structure to the downside. This was my entry right here on this 1-minute break of structure. Price closed below this wick, break of structure, reaction off the 5-minute gap, stops above the 5-minute fair value gap. And what are you targeting? I wanted to see price just come into this gap. I ended up closing it a bit early, but regardless of this, if you want to hold this and you believe in this trade going down, put the kill zones indicator on, and you can target all this open liquidity. You have London low, you have Asia low, you have all the way down to this gap. Like I said, when you have all of this resting liquidity above a fair value gap, price is usually just going to aggressively run through this. So again, from the top, price manipulates above the high, sweeping out liquidity. It invalidates the bullish order flow by running through this 4-minute bullish fair value gap. It retraces into a continuation confluence, which is going to be this 5-minute bearish fair value gap. And then from there, you're just scaling down. You're looking for an entry off either a break of structure or an inverse fair value gap to the downside in this case. I take my entry here on this break of structure. I put my stops above the 5-minute fair value gap. And for me, we're just targeting down. I actually got out over here because at this time, NQ, I was copy trading across 4 accounts. And on top of that, ES had came down and swept out all of this. So I was expecting kind of a bullish SMT to get formed. But regardless, I had my stop at break even. So if I didn't, I would have actually gotten stopped out break even. But then if we click out of this, price ends up like completely nuking down, and it would have taken out all these draws on liquidity to the downside. Literally all of it, right? So this is a clear example of an A+ trade for using this reversal model, okay? Once again, I'll go through it just from the top. We manipulate above the high. We sweep out liquidity. We then look for an invalidation. So we invalidate the bullish order flow by running through this gap. We retrace into a continuation confluence, which is this 5-minute bearish fair value gap. And now we're looking for an entry. Again, you enter off an inverse fair value gap or a break of structure to the downside. You enter here, stops above the gap, and you just target the open draws on liquidity. What are the open draws on liquidity? You just use that kill zones indicator, and you just see what draws haven't been tapped. So we have these gaps, all these gaps in here. It was a little bit sketchy because we're trading into these gaps, but London low hasn't been taken, Asia low hasn't been taken, this New York PM low hasn't been taken. You target all the way down, you would have caught 5R on this trade. So that's pretty much it for this reversal model, guys. Just remember those steps: the manipulation, the invalidation, the retrace, and the continuation. And that's how you'll catch these reversals. Utilize those 5-minute, the 4-minute, the 3, the 2, the 1, and just find whichever the highest time frame of those gives you what you're looking for, and then go off that. And that's pretty much it for this video, guys. Hope you guys enjoyed. Gave these trades for free in the Discord. I'm always in there talking. And in the live trade commentary, and I give market analysis every morning for free. So if you guys want to tap into the free Discord, check that out. Mentorship link in the pinned comment and all that stuff. So check out my socials, link in the description. So that's going to wrap it up for me. Hope you guys enjoyed this one. Until the next one, give me a like, subscribe. I'll see you guys in the next one. Peace.